Have you join us? For those I haven't met yet, my name is Dinesh De Silva. I'm the founder and CEO of netStripes. Look, there are quite a lot of you who are here. This was really meant to be a recorded webinar, but because there are so many who have registered, I decided to do it as a live webinar. So I'm live here. What a great time to do a blockchain webinar when all the cryptocurrencies across the world that are working on the blockchains are plummeting down or have plummeted down. And there's so many naysayers. You know, like any disruptive technology, this is to be expected. The internet, as you know, started in the 90s, started really getting steam in the late 90s. And there was that dot-com boom we saw. And then in 2001 timeframe, we had the dot-com bust, or the technology bust as we saw it happening. Businesses that were having massive valuations, like what you're seeing now, went belly up. The businesses that had proper business models did survive, and today they've become some of the world's largest corporations. So there you go. So these are times where in the dot-com bust, it really sorts out the men from the boys, or the women from the girls, if you want to call it. You know, it really catches who can really stand up. So let's, I'm going to share my screen I will go directly into the presentation, but a huge welcome to all of you. You are FBAA members. I want to run this as an interactive session. So go to the chat, by the way, and introduce yourself. Tell us your name, what your business is, where you're from, and you know, because it's all about collaboration. Get to know each other, you know, if you have any questions, go to the Q&A and ask those questions. By the way, don't put the questions on the chat, but go to the chat now and introduce yourselves. I know quite a few of you are netStripes clients. Some of you are new here, so to all of you, a huge welcome. All right, I'm going to share my screen, and what I would like to do is, as you see my screen, please put your hand up so that I know, one, that you can see my screen, and also we start getting participation from each of you. All right, get your hands up as you can see my screen, guys, so that I know for a fact that I can get this show on the road. Okay. That this is why you're all here for. And what are the applications of blockchain? It's not just cryptocurrencies. There are genuine business applications that you can create. And here are two Aussie entrepreneurs who created the world's first digital bank guarantee. What you will also see is that the biggest banks in the country are fighting over these guys and investing their money into these blockchain projects. Not only these guys, by the way, this was on the AFR in April. You see the date there. Not only these guys, right? I'm sure you've heard of Maple. Maple is an Aussie business. They do under-collateralized loans for institutional borrowers. Okay, so they had a huge market cap, but look at their market cap. When I last checked, it was 105, but they had I think that's plummeted. Okay, so still it's very high in US dollar terms. Now, I'm sure you would have also heard of another Aussie company. Their market cap is 272 million, but they were about $2 billion not too long ago. And this is Synthetics. Again, an Aussie business created in Australia, is world famous now. So there you go. again, here's another Aussie, this is more about bringing crypto investments to consumers, okay? So this is DeFi Investment Management Fund, if you want to call it. Again, these guys were featured in the Sydney Morning Herald in December. So multiple users of the blockchain. And in this case, consumers want to invest in cryptos, but some people are not as savvy. But quite a few people in Australia do take risks, as you can see. Roy Morgan research of April 2022, 1 million Aussies have invested in cryptos. What was really shocking to me was nearly 70% of them were men. So does that mean that women are more smarter or less risk-taking? That's something that is worth looking at. And now if you also look at it, there's about 20 billion invested. And out of that 20 billion, 81% of it has been invested by men. Wow, that's surprising. And you can see the breakdown from an age perspective. You'll see the 25 to 35 group has the largest number of investors, but they are not so much bigger than those in the 50s. Actually, they're smaller than those in the 50s who got 7.6 billion, although the number is a lot smaller. Obviously, they probably have a lot more money collected over their lifetime. Now, the blockchain and cryptocurrencies are being offered by the banks of the world, Morgan Stanley here, Goldman Sachs of the world. So these major banks, they're all getting into having a play in this blockchain area. Now, cryptocurrencies are a part of the blockchain. I'll cover that a bit later, but I just want to talk about the global acceptance, as you're saying, and it's not just in Australia. Here's more global adoption. China created its own digital currency called the ECNI in 2021. That was a big move. El Salvador made Bitcoin a national tender. That's a huge move against the advice of the IMF and the World Bank. And in April, another country, another nation, an African nation, the Central African Republic, have also done that, but it's a small landlocked nation of about 1 million people. So again, and right now, I am told, I think it was last week or the week before, there were about 20 large nations who had gone to El Salvador to study their case of adopting Bitcoin as the national tender. And there were some very large nations in there. So I'm not going to go through all that. You can read much faster. The idea is adoption is happening, including the approval of the Bitcoin futures ETF in October 2021. Again, that was a big deal. So today, as I said, this is Bitcoin, and these investments widely fluctuate. This is not an investment seminar. This is, I'm not here to talk about investments or what's good to invest in. This is about understanding blockchain and the applications of blockchain and the adoption of blockchain. The way I see the blockchain today to me is more like what the internet was 30 years ago. The blockchain can be a hugely, how would I describe, hugely popular application or technology that can be adopted for multiple applications in every aspect of human life. I truly say that with great belief, because I understood what was happening with the internet in the 90s. I did start an internet business that became fairly successful, or a technology business. That was the price at 10.52. But Not too long ago, the price was very different. So again, widely fluctuating. But that 64,000 price or that $29,000 price you're seeing was 7,300 in December 2019, not too long ago. So it's about 4 times. So in December 2019, it was 4 times that price, 25% of the price. So again, as it dropped, it has fluctuated, right? It has dropped from 64, but it has increased from 7,300. So it depends how the perspective you're looking at things at. Again, that 7,300 was hugely high compared to some of the figures you saw in 2019, at the beginning of 2019. So this was on Bloomberg on the 31st December 2019, that Bitcoin had risen 9 million %. And the skeptics were absolutely aghast, as you can see. So right, similar to that, there are a lot of skeptics now. Again, this is not an investment seminar. I'm just trying to share the perspective, and I'm comparing what I saw with the internet bubble, the dot-com bubble, and the bust, and the booms thereafter, until now. If you look at 2020, so this is 2020, okay? I'd like to go back to that pricing of 27 December 2019 of 7,300, that. And so this is around that time, Bitcoin versus US asset classes. Look at Bitcoin and look at the S&P 500. Warren Buffett, who has a lot to say about Bitcoin, negatively, of course, has told everybody, who listens to him, who goes to his annual event, Omaha, that S&P 500 is the investment instrument that people should take without investing in individual stocks. Look at Bitcoin compared to that, or compared to real estate. Again, these are 2020 data, but it's looking at a decade of investment. Warren Buffett also said Bitcoin is a mirage in 2014, and he continues to say that. He said that recently in May 2022, he would buy it for $25. A very smart man in Bill Gates said this in March 21. In 2018, he said, I would short Bitcoin. And he was shorting Tesla. I don't know whether he was shorting Bitcoin, but he was shorting Tesla. I think most of you will know that. But in May 2022, Bill Gates has been proven right comparatively, because the markets have plummeted. I don't know whether it's 90% corrections, but in some cryptos, I'm sure it will be as high as that. However, Warren Buffett missed the entire internet wave. He didn't invest in Amazon. He has publicly mentioned that. Recently, there are some investments in Amazon that were made about 2 years ago, but he missed that entire Amazon boom. And Google, lots of those businesses he didn't invest because he said he didn't understand them. So does he understand the blockchain? Cathie Wood, who is a rockstar investor, a lot of you would know of her. She's the CEO of ARK Investments. And when the Bitcoins had a market cap of 1 trillion, said this is nothing. Of course, the market cap has dropped to about 550 million now. So that's a huge drop. But Cathie Wood she's highly respected because she is one of those guys who invested in Tesla when everybody was shorting Tesla. And that's ARC has made a lot of money as a result of that. So there you go. By the way, guys, for those who came in late, I'm Dinesh De Silva. I'm the founder and CEO of netStripes, as I mentioned earlier. And this session is with the FBAA. A big shout out to Peter White and his team, because these guys are very professional in the way they run the FBAA, your industry association. We at netStripes work with multiple industry associations, and I can tell you, having worked with so many, these guys are very good. This is what we're going to cover today. I'm going into in detail. So what I did so far was just a prelude to what I was going to cover to set the scene. So let's get started. I did say it was interactive. I have a lot to cover, so I know a lot of you try to multitask. The issue with things like the blockchain is you might pick up one piece and miss something really important. That can really, what you miss can really get us unstuck by implementing or thinking what you thought was right. So it's important to really understand this as a process. For those who don't know who netStripes are, netStripes are known as the most effective system for small and medium businesses to transition from your traditional ways of business to becoming digitally successful businesses. There are quite a few clients from netStripes who are here, who've used our system or in the process of getting started. If you're there to talk to them, they will tell you how happy they are or how easy it was for them to transition successfully, because digital is about catching the wave. There's a huge gap between the digital haves and the have-nots. The people who catch the wave find it so much easier to grow their businesses. They have clarity, they know what they are doing, and there's a pathway to follow. Those who don't get digital find it so frustrating and invest lots of money and time and still don't get the results. So catch that wave. Our vision from the time we started in 2014, we are a company with a very, very powerful vision, and we have been working towards this. We're making a lot of headway, not working just on our solutions, but also working from a macroeconomic perspective to make sure people understand that we get the power of all the industry associations and governments to help us to achieve that vision. And these are just some of those industry associations. These are just a few of them that we work with. And the good thing is the systems we've created works across multiple industries, of course, in the finance industry, in the mortgage broking industry, but in so many other industries. Because it's industry agnostic. All right, that's all about netStripes. But importantly, what's good for you is in the recent budget, small businesses have access to $1 billion to get your digital stuff right, okay? And the government understood there is that digital divide that they have to bridge to help technology adoption amongst SMEs. And the reason they've done it is because 86% of our businesses are in what's called digital code red. 86% of businesses in Australia, out of the 2.4 million SMEs, are not succeeding transitioning to a digital business. They're still dependent on word of mouth referrals, they're running their businesses in the old way. And it happens in every state. So the government says in this financial year and the next financial year, you can spend up to $100,000 on digital. You don't have to spend so much, by the way. But the beauty is that if you spend $100, you get $120 in tax deductions. That is massive, because before, capital expenditure in this digital area was depreciated over 5 years. So this is massive. It's unprecedented. Make use of it, and this is what you can make use of it for, to get your strategy. Strategy is fundamentally important to get your digital stuff right, websites, digital marketing, advertising, etc. So if there is massive frustration, we know a lot of people tell us after spending money and time, when you don't get results, get out of that. And the reason for this is we have been working with multiple federal ministers, business industry associations to with this vision, and it has been, we've been doing it from 2015 with the previous government. Now we have to continue it with the new government. All right, there is a link to a blog that we have written. Have a read of that as well. Okay, let's get to blockchain 101. So a blockchain is an up-to-date real-time ledger. We all know what a ledger is, but it's an up-to-date and it's real-time. It can do financial transactions to ownership of physical assets. So the applications of the blockchain are massive and wide. The information is stored in a distributed, but in a peer-to-peer fashion. So that's something we need to remember. Every record is encrypted and timestamped. So every time there is a record or a transaction, it's encrypted so that it can't be changed, and it is timestamped. Users gain access to the file through their private key. Everyone's copy of the distributed blockchain is kept in sync. There you go. So as a result of that, blockchains are very secure. Blockchains, a lot of people think it's very complicated, and it definitely can be, but I want you to think of it, we at netStripes make everything. We try to simplify digital. We try to simplify everything. And this is our attempt at simplifying blockchain, but its core concept is really like a database. Okay, so it's a type of database. It's not quite a database. The difference is how the data is structured in this database. Blockchain collects information together in blocks or groups, okay? Then when a block is filled, they're chained. So that means all the information of the block are filled, they're chained onto previously filled blocks, forming this chain of, and this chain of data known as the blockchain. So that is simply the blockchain. So the difference is how data is structured. Blockchain collects information together in blocks. Then once blocks are filled, they are chained, and that is what the blockchain is. There you go. So very simply, it's a ledger, a distributed ledger where information is stored in a peer-to-peer fashion, and it's like it's a type of a database. There you go. So let's see how this works. A transaction is requested. It could be any transaction. Don't try to complicate matters. So think of buying a coffee, as simple as that. We buy a coffee nearly daily, or depends if you drink coffee. A block that represents the blockchain is created. The block is sent to every node on the network. Nodes validate that transaction, okay? Transaction is started. A block that represents the transaction is created. So remember the blocks that fill. Block is sent to every node in the network. So bang, bang. So all that information is sent to every node in the network, and the nodes validate the transaction. Nodes receive a reward for the proof of work. Remember that, proof of work. So that's what you see. You've heard of Bitcoin farms or Bitcoin server farms. The reason those Bitcoin farms get Bitcoin is because they are the nodes, as you saw there, that validate those transactions. Okay, so in this case, it could be coffee. The block is added to the existing blockchain. We heard that, we learned that before. And the transaction is now complete in 6 steps, bam. So we bought our coffee. My purchase of the coffee was created, sent to every node on the blockchain. Nodes validated that I had bought that coffee on that date. And because the nodes validated, they got probably 100th or 1,000th of a coffee, or some 10 cents probably, right? Nodes receive a reward for the proof of the work they do, and the node is added to the existing blockchain, and the transaction is complete. So this could be not coffee, it could be a purchase of a house, it could be a purchase of a car, it could be any transaction. So blockchain technology, it's decentralized, it's transparent because everybody on the node knows that transaction, and it's secure because you can't go back and change it because everybody on the node knows the transaction and it can't be changed. It's called immutable. So a decentralized versus a centralized. A centralized ledger is like in a clearinghouse, like a check clearinghouse. A decentralized ledger is just as you see on the right. So blockchains operate on a distributed ledger. Talking about a distributed ledger, I'll talk about it a bit later, actually. So blockchains have no physical form and exist in an immutable. Immutable means can't change. Immutable blockchain. While blockchains are mostly used to store cryptocurrency, we've heard of that, other things like legal contracts and product inventories can be stored. And this is so valuable in inventories and legal contracts and smart contracts, a term that you will hear. So let's go into the cryptocurrencies and see how these blockchains operate. A cryptocurrency or crypto is a digital asset designed to work as a medium of exchange. Ownership of records are stored in a ledger. Now we know that using strong cryptography. That's that encryption we were talking about to secure transaction records. So now see how it is so connected. Cryptocurrencies use decentralized control as opposed to governed by a central banking system. Now, this is what I was going to tell you earlier. So when the Bitcoin thesis was written, the white paper was written, the reason it was written was because after the GFC, Satoshi Nakamoto, that's his pseudonym, who apparently wrote it, said that the central banks of the world were hand in glove supporting the very people who created the GFC. So GFC was created because of the subprime mortgage issue, where banks were like drunken sailors doling out money to people who didn't have jobs, who had no chances of paying this money back. And not only that, there were derivatives of multiple loan books, if you want to call them loan portfolios, that were sold and resold that created this whole GFC. And the banks made a lot of money as a result of that. So they realized that, having this central banking system is not helping the masses. And as a result of that, they needed to have a decentralized mechanism as opposed to having a central bank, because the central banks were the very people who were helping the banks to help them to, come back to normalcy. So you can argue it both ways, but this is why the Bitcoin thesis was created. And cryptocurrencies use decentralized control as opposed to be governed by a central banking system. The ledger controls the creation of additional coins and to verify the transfer of coin ownership, okay? And that happens through the nodes. Bitcoin is the best known, we know that. Bitcoin today has a market cap today at 1106 of 1.25 trillion. As of when I did this same seminar a few days ago, it was, a few months ago, I apologize, was 2.27 trillion. Look at that, look at the drop, 1 trillion. Right, the crypto markets have dropped. The market cap of the total crypto markets have dropped by $1 trillion. It's real money, real money. It's not fake money. And by the way, when I ran this same seminar, I've taken, I think it was the 10th of May, it was about 1.26 trillion. So it wasn't too different. So it's about the same amount. All right. These are the 10 most popular cryptocurrencies as at today, okay? The total market cap is about how much was it? Yeah, 1.25, that's what I said, sorry. There you go. Bitcoin market cap was 555 at that time. So there you go. That's what we saw. So if you have any questions, go to the Q&A and I'll be more than happy to go and answer all those questions at the end of the webinar. So let's get into DeFi, or decentralized finance. DeFi is a fast-growing aspect of finance, and there are multiple DeFi applications or use cases, as they call it, in every aspect of finance. So you take insurance, there'll be DeFi use cases, and you get the different derivatives of insurance, you get different DeFi applications. Not just insurance, mortgage, broking, every aspect of finance. So application of blockchain in finance is DeFi. It does not really rely on central financial intermediaries, namely brokerages or exchanges, banks or traditional financial instruments. Instead, it utilizes blockchain-based smart contracts. You can lend or borrow funds from others. I think most of you know that. Insure against risks and earn interest in savings-like accounts. Trade cryptocurrencies. Speculate on a range of assets using derivatives. Ethereum is the most common DeFi platform. By October 2020, over 11 billion deposited in various decentralized finance protocols. Tenfold growth during the course of 2020. Think of that, 11 billion, right? But that's after it grew tenfold. Imagine that. But look at it now in 2021, September, not now. Probably would have gone down by now. So how do you, as a business owner, use these concepts? That's the question most of you will have. This webinar is not quite that you need to go and use blockchain technologies to build a blockchain for your business, but to be aware of the application, the fundamentals of blockchain, but also the applications of blockchain within your finance sector. And what opportunities lie. I mean, some of you may want to create a blockchain, and I'll cover basics of how to create a blockchain later on. But this is about you really getting an appreciation for blockchain technologies and then to find a way of continuing your learning. Now, one of the ways, when I used to do similar courses in digital, I would say, you can go to YouTube and say blockchain in mortgage broking and see what's happening. Blockchain in life insurance, see what's happening. Blockchain in property settlements, see what's happening. And you can go and check those use cases on YouTube. And at the beginning, you may not have a lot of use cases, but I can guarantee you, this is getting more and more use cases coming. And so you can be at the forefront of technology. But the unfortunate aspect is 86% of businesses are still in digital code, right? So before, most of you, and I would believe that 86% of everyone here would be in that situation. It can't be much less than that. It can be a bit less, but not much less. So before we get into the blockchain, it's important you get the digital technologies, your transition from your traditional ways of doing business to a digitally successful, savvy business. And the government wants you to bridge that digital divide and support that, because they believe that your digital adoption is vital for the nation. Okay, so join us. You can join us at this webinar. I'll be covering a lot more of that, because how do you use the incentives, strategically, but also, you don't want to spend too much money making that transition, and you have to do it in a way it works for your business. Okay, not just as the industry as a whole, but everyone's business is different, and you have to compete amongst other mortgage brokers or other commercial lenders, and you need to be able to stand apart from the crowd. And how do you do that? All right, so let's get into banking with blockchain. So that's what I meant. Before you go into blockchain, this is about making sure that you appreciate the blockchain technologies. You can go to YouTube and continue your learning, but before you get into blockchain, make sure you get your digital house in order. So let's go back into banking with blockchain, okay? Banks, I don't have to tell you, you guys know this, right? It's time consuming, not very flexible. Are they flexible? Impossible to get flexibility from a bank, right? Less accessible, cumbersome, expensive, you guys know it. And blockchain changes all that, okay? Increases traceability, efficiency, speed. Speed will be changed massively. Look at the way the internet operates now. And the banks are still just so slow because so many things are manual, and all that will change. And the banks adopting blockchain. I shared with you a lot of that. Lower banking and insurance fees. That's what Capgemini says. Will save 16 billion a year. Stock trading settlements cost and time. Blockchains are faster. Even today, how slow are banks? Interbank transfers, just too slow. It has improved a lot, still too slow. We do interbank transfers between Australia and other nations, and it takes days. It shouldn't. One particular transaction last month got lost in the way, and it took 3 weeks to reach the recipient. I mean, this is the internet age. It's not even acceptable, and they couldn't trace it. Blockchains make sure that traceability is there. So that's what I shared earlier. This is in real life. Blockchains never sleep. They don't take holidays. So there you go. Banks don't close. Traditional mortgage industry, as you know, I'm not going to read every one of them. You know the issues in the mortgage industry more than I do. Go and have a quick read of that. This is what you tell me, or the other advisors at netStripes. And I'm sure a lot of you can add to this as well. We just put 6 here. Will blockchain revolutionize mortgage lending? It's a question to ask. Would it get rid of the mortgage brokers? I don't think so. Why? Because you guys deal with the individuals you deal, you understand the people that need the help, and you find the best, your advice finds the best solutions for them. The excruciating pain when all these blockchains come, the complexity will increase. The complexity for the individuals will increase because things will get more advanced, and still it needs that human interface to sit in front of the mom and dad or the investor and give them that advice. All right, so let's go and do a transaction, a mortgage transaction on the blockchain. A transaction is agreed and the digital process begins. Okay, now remember the previous process we did when I used coffee as an, oops, what happened? Give me a second. All right. Hit the wrong key. The transaction is entered into the blockchain. All information related to that transaction, the income of the individuals, the credit rating, deeds, associated contracts are validated. Now, when these blockchains are in operation, all this information is already there and it's validated. So all those issues you have now of validating all this, collecting all that information goes away. Once validated, the records or block is inextricably linked with other transactions on the blockchain. So it is linked, as we spoke earlier, at the back, and it is chained. The word we used earlier was it's chained. Oops, sorry, press the wrong button. Now, there's proof of provenance, ownership, transactions, exchange value. All that is immutable within the network. It is chained and you can't change it. Now, the transaction is complete. So imagine this. If all that information is there and it is validated, what does your customer need? Your customer needs your advice. What is the best way forward? That needs personal judgment between the advice you give and their personal situation and the decisions they want to make. Once that is done, all that other stuff that takes all that time is taken out of the system. So if it's a mortgage loan origination system and a mortgage broking, these are the actors. You need the credit and asset information providers who have that information on the blockchain. This is the data. They're called the oracles. Outsourced verification providers. They have the data. All that information is available. It's on the database, on the blockchain. Settlement services, all that information is available. It's on the blockchain. So from the beginning of the transaction to the end of the transaction, it can be pretty quick. There's a national blockchain roadmap. So the Australian government is a bit behind Singapore and Europe and UK in particular. But we do have a blockchain roadmap. If you go and research, you will see. But the most important thing I see here is the financial and insurance services have the most amount of blockchain activities. Okay, look at the other industries. So your industry is right up there. And that's where, and by the way, ASIC has a DLT or digital distributed ledger technology arm. And there's a bit of work happening in there because they understand that they have to get regulation to compete with the likes of Singapore, the regional finance hubs, the UK, etc. So there is a bit of work happening there. A pioneering Aussie engineer refinances his home loan using DeFi in a single day. So that is something interesting. This happened in February 21. There haven't been any blockchain mortgages happening in Australia. So building a blockchain. So I did say I will share how to build a blockchain a bit later. Let's go through the process. There are 8 steps I'm going to share with you. Firstly, identify the application or the use case. What are you going to use the blockchain for? I'll talk a bit more about use cases a bit later. Identify the consensus mechanism. We spoke about proof of work, okay? So there are other consensus mechanisms. Now, for instance, Ethereum and a few other blockchains use proof of stake. Cardano and Solana, they use proof of stake. You would have heard of those blockchains. And it's meant to be more efficient than proof of work. So there are other consensus mechanisms that you need to consider. You need to identify a suitable platform to build your blockchain on. So is it the Ethereum platform? There are so many other platforms that you can use. IBM has a platform as well that is used quite widely. Then you've got to design the nodes, because it's those nodes that do the work and store the data, and that mechanism has to be understood, and there are best practice ways of doing that. Then you've got to design the blockchain instance, that is the particular blockchain. And then how do you build the APIs, the connectors, the linkages to talk between the different, where the integration happens. And then you got to make sure you make it easy for people to use. So the user interface is clearly understandable. It can be used easily on a phone or on a laptop. And the backend, the administration must be easy, as opposed to requiring programming and stuff like that. So then you got to think of the future technology and the future enhancements, the roadmap of that, your blockchain will use, because you build an initial application, and then you got to think of how are we going to improve it, what new technologies are we going to incorporate. So I did say, I'm going to just look at step 1 a bit in detail, because I don't have the time to go through all the steps. And this is not about teaching everyone how to run blockchain applications. But there is a lot of hype. I don't have to tell you that, the amount of hype. And that's why I compared to what's happening in the blockchain markets, the cryptocurrency markets. To the dot-com boom and the bust. There are huge claims that are not quite true. You know that. There are claims about erasing global hunger, make the world corruption-free, end poverty. But I shared with you when I started this session of 2 entrepreneurs, Aussie entrepreneurs, who created the world's first bank guarantee. And the banks jumped on to invest in them. So the banks are waiting for opportunities to invest in blockchain. So again, go looking for use cases that are really valuable based on your knowledge. Now, with internet innovation, what I always tell people is innovation is easily done by those people who have been in any industry for over 10 years. And this is still very apt for the blockchain. You guys who've been in your industry for over 10 years, you know what works in your industry, but you also know what sucks in your industry. There lies the opportunity to create change and innovation. And there lies the opportunity to consider how might a blockchain technology change that current paradigm. And that's what I want you to really think about here. I hope I made some sense there. I hope I got you thinking. As I mentioned earlier, this is not about investment. This is about every one of you understanding the blockchain, thinking, how may I consider building an application on a blockchain? What is the use case that I really can think about? Okay. But a lot of you I know are not quite there, because 86% of SMEs are in digital code red. A lot of you have to get your digital stuff sorted. So it's always a step-by-step process. It's not difficult. And you can talk to anybody who is here at the netStripes clients who are here, who had that journey, who found it so efficient and so cost-effective to do it. And it's like a no-brainer. And they think, oh my goodness, why didn't I do it sooner? All right, so get that digital house in